Okay, folks, welcome to, I forgot my water. Damn it. Welcome to Thursday Night Stock Charts Live. Here's an old one. This is Bob Desmond, and what we're going to be talking about today are after hours action in terms of earnings, Twitter, and Amazon. We have been doing quite a bit. I think it's about a month now. I think it was about April 1st we started. We changed up our strategy from simply being long short the market to maintaining long short positions, but however, new positions by and large are cash flow generation trades with the use of options. In short, we are not buying options. We are not the gambler. We are the casino. Why? Because we're selling options. We have the odds on our side. And so far, we've traded this earnings season quite well. Our Netflix, Microsoft, in fact, Netflix, I used TrendSpider, I believe it was, to identify where to place our upper strike on our call option. Yeah. So today we booked profits on Qualcomm. We had a trade. They announced earnings last night. We booked that profit. Amazon was earlier in the week. And Amazon, that trade should expire worthless tomorrow, meaning all the premium collected, we will retain. We will keep all that premium. So right now, time decay, for those not familiar with IV crush, implied volatility crush, that'll work in our favor. What is implied volatility crush? Basically, it's the value of that option. Forget about the theta. Forget about the time decay. The value of that option is going to collapse tomorrow because earnings are over. The speculation is all over and done with, and nobody really cares about those options anymore. Therefore, supply and demand. So we retain all of that cash flow for our pocket. So we sold the 37.30 call options to the upside. The high of the session was 36.67, and we sold, what was it? We sold the 32.05 strike to the put side. So very good trades. Amazon, good earnings. Twitter, not so fortunate. Hammered after hours, as they should be. So I think that Twitter is, by and large, dead money. We were short of Twitter not too long ago. We booked profits. And I think Twitter is going to head down substantially lower. This is the impact of them, A, not having Trump anymore, B, just canceling people right and left. There's going to become a price, man. There's going to be a time where people say, you know what, enough. And I think they're in trouble. So what we're going to talk about today being Thursday, what do we talk about? We talk about the weekly charts. We get ready for next week right now. Why? It's because the weekly charts will send us a signal of as to where we believe the markets are going this trading week. Now, we're going to go over the same charts on Saturday. I'll go over them with members on the week ahead commentary. If you're not currently a member, sign up for the 14-day free trial offer. Get our insight of as to where we believe the markets are going this trading week. What are we going to do with our positions? And what new trades we're looking to put on. William, hey, Bob, how's it on Long Island? A little bit rainy. Drizzly, not too bad, though. Warm. Looking at AMD and INTC. I was going to trade the AMD contracts the other day, but I opted not to. I went with, who was it that night? Was it Netflix? I want to say Netflix. Qualcomm was last night. I think Netflix was the same night. Correct me if I'm wrong on that. So before we get to the weekly charts, let's talk about our friends, our sponsors over at TrendSpider. I haven't spoken about them in a few days. They're hurt, so I will certainly give them the respect that they deserve. Folks, if you're not currently using TrendSpider, you're missing an arrow in your quiver when it comes down to your edge over your competition out there. And let's face it, this is a business. This is not a game. Sometimes trading can be gamified. I don't consider it that. It is a business. We need to worry about our risk. We need to worry about our reward. To do both, to identify our risk versus reward, we need automated technical analysis. Time is too precious. So automate your grunt work by using their automated trend lines. Click of a button. I'm going to show you how to do it tonight. Speed up your analysis by using automation. Improve your accuracy, again, by using automation. Reduce costly analytical mistakes and time your trades with precision with their trade alerts. I use them all the time. Find winning chart setups with their scanners. You don't have to worry about building them. They're already built for you. I haven't built a scanner on there yet. I take from the people that built them, the really smart people, because I'm not that smart. I modify them. I save them as my own, and I'm good to go. I have a couple that I like, I use. We're not reinventing the wheel here. So TrendSpider, 35% discount code below, and you get the cheapest price on the web. Join now. Let's get to the weekly charts. I have a feeling this is going to be a quiet night tonight. Yeah, quiet. Wow, this is amazing. All right. People will join on eventually. All right, let's go to the weekly charts. Let's make sure these have updated. Yield curve now updated. 10-year yield now updated. Let's go to the dollar. Now updated. Okay. So let's begin with the bond market. The yield curve. The yield curve had a brutal April. Right, very strong March, a brutal April, an inside month, but we have rallied well off the lows of the month. What does that mean? It means the yield curve is beginning to steepen yet again. What is that good for? Transportation stocks, energy stocks, bank stocks. What is it bad for? Technology, high beta, your NEOs of the world. I think NEO reported tonight, didn't they? Let's see how they did. I believe they were on the calendar. Certainly looks like they did. Yeah. NEO announced Q1 loss, narrows Q1 loss, blah, 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 blah. Sets Q2 guidance. All right, not horrible price action after hours. Okay. So these are your beta stocks, your volatility stocks, especially the Chinese stocks. So be careful of them when yields are moving up higher. Be very, very careful. And that's why we've adopted a cash flow strategy using options. TLT, weekly chart. Not a good week, not a horrible week. We're barely holding on to a support level here. 3 consecutive weeks of stalling action. Is this bear market rally over? Could be. The 10-year yield. Big reversal week. So we've had let's say a 5-week pause and pullback. Now we are beginning to creep up higher yet again. Watch what we're... Hi, Bob. Hope you're doing good. Same to you, Big Bear. Thanks, man. Watch for a new breakout above recent highs. And if we hit 2% on the 10-year yield, you got to watch out for everything. Remember the debt. The debt that we have is far greater than the last time we were at 2%. And that's where the market buckled back in 2018. So, man, we're on thin ice. It's so crazy. Beware of the rising yields. They should go higher, but it's not good for equities short to intermediate term. Tips. Inflation, folks. They want to say there's no inflation. They cry about it. The Federal Reserve doesn't want you to look. They don't want you to look at this. They don't want you looking at this. This is the tip market, the bond market issued by the Treasury of the United States of America, telling you there's inflation. Why? Because there's demand for tips. Investors, big institutions. The Federal Reserve is one of the largest holders of tips. They're worried about inflation. So inflation's creeping up higher. Let's take a look at a daily chart. Pull back off of yesterday's bullish reversal bar. Light down volume. Okay. The US dollar, a basket case. We're probably going to break here. This is your bear market bounce. The bear market is in full effect. Weak stocks, weak currencies, weak commodities tend to get weaker until they don't. They base, they put in a higher low, and they break out. We're nowhere near that yet. So in all probability, we are breaking down. I have to figure that we'll be down in the 80s by the end of the summer. On the Dixie, the VIX weekly chart, up week so far. Strange part, S&P 500 is up too. So people are hedging this market. When you see VIX up, along with the S&P 500, that tells you that you may not be seeing distribution of stocks by institutions, but they're buying insurance. They're getting ready. Daily chart. A big fade on the day. We were talking about this last night on Market Wrap. The fact that 17 has become a really stiff support level. So here is your bull flag setup. And take note of your higher lows on RSI. So RSI is trending up. VIX is trying to break out. Warning flag on the track for equities, but we've been here before. 40,000 Headman. Hey, man. Good to see you. We are skating away on thin ice of a new day, but the Fed is going to write us in to the passion play. Yeah, they will. Yeah, we'll be taking poison at the end of that play, falling on our swords for the greatness of the elite. Crazy, man. The Dow Transports. Weekly chart up nearly 2%. 81.22 on RSI. Weekly time frame, very light volume. Daily chart. We're probably going higher. We're probably going higher. We've been hugging this 2 standard deviation Bollinger Band for a while now. It's amazing, the rally in the transports. GDP came out today. It was pretty good. It missed by a basis point. Overall, pretty good results, but they're going to be fleeting. Dow Jones weekly chart. Looks like we're poised for a continuation breakout here on a weekly time frame. 1 trading day left to go. We don't know what tomorrow brings. Amazon's results should help boost the overall market. The daily chart of the Dow Jones. We're in a trading range here. Bullish reversal bar off the lower band of support. We're probably breaking out. Volume rose today, folks. This is the first, well, I'm shocked. This is the first above average volume bar to the upside since March 10th. March 10th. You would be of the opinion that the Fed is going to give us a lethal dose of salvation. You know, they're backed in a corner. They're backed in a corner. Even if they allow their balance sheet to roll off, which is technically a rate hike, if they allow their balance sheet to roll off, the market just goes to pieces. So you have the 2022 elections coming up. Let's face it, I'm not going to mention parties, but one party is, I can't stand either party, but one by far more than the other I can't stand, and they're in jeopardy. If we're gonna have a fair election, they're in jeopardy. So if the stock market falls apart, they're going to be annihilated at the polls. So I don't think, given the politicization, I can't even say that right, of the Federal Reserve, I don't think they're going to take the punch bowl away yet. Not before the 2022 elections. S&P 500 recovered a bit. New all-time highs today. But they're going to have to go big to keep this going. And probably Biden's plan of spending will help keep this party going. The problem is his tax and spend plan. I mean, it's bizarre. It's bizarre. Weekly chart IWM. Let's bring up my annotated view. I think this is the lightest Thursday night I've seen ever. Wrong chart. For disclosure purposes, we have a short position on IWM. We've broken out on a weekly time frame. Believe me, I do not want to say that, but we do. Why are we still short? Look no further than the monthly chart. This is, it's nuts. We're so far extended beyond the 48, 50-week moving average down here. It's never been seen in history. We're above the third standard deviation Bollinger Band. If you're not familiar with what that is, we're not supposed to be there. Simple as that. You're not supposed to be there. So we've been there for several months now. And when this goes, look out below. Daily chart. Now, we did attempt a breakout today, but we had a very bearish reversal day. And outside bearish engulfing, in fact, we did manage to rally off the lows. But volume did rise, still below average. MACD histogram is flatlining here. So a warning flag is on the track for the small caps, 4-hour chart. And here's what we're watching. Head and shoulders setups on both the 4-hour and daily charts. We're attempting to now negate this head and shoulders setup. Ideally, from a short perspective, I want to see it follow through to the downside, but I may not get my wish. So we'll have to hedge the position, lighten up on it. But either way, we're not going to allow it not to be managed. 120 billion per month for the rest of the year, and then half that amount next year. And honestly, half that amount will crush the market. That's what people don't understand. You know, half that amount will crush the market. There's a law of diminishing returns. Remember when Bernanke, before he left office and Powell came in, well, excuse me, it was Yellen, then Powell. They were doing about 80 billion a month, right? 50 billion or 80. I think these numbers are so big. It was between 50 and 80 billion a month. Now it's 120 billion, 80 billion in treasuries, the remainder in mortgage-backed securities. So the only way to keep this party going is to increase that amount because of the law of diminishing returns on that 120 billion per month. That the addict, the heroin addict, which is the stock market, needs a bigger fix to get the same high. And if they cut, think about if you're a heroin addict and you only get half the dosage of heroin, whatever, what is it, an ounce? What do they take? I don't know. But you get, I think it's a gram. Half a gram versus a gram you were getting daily. You're going into withdrawals. That's your medicine, right? So if they do this, if they bail on these mortgage buying, then this market's going down. Remember, Ben Bernanke said the Fed can never be compelled to reduce their balance sheet. Yeah, and honestly, he's got a point. They can't be compelled. But there is a matter of doing the right thing. And the only way they're going to do the right thing is when you have, honestly, unfortunately, when you have rampant inflation and you have people taking to the streets because they can't eat. Then they're going to have to correct the inflation by raising rates, and there goes the stock market. So right now, he's made it quite clear. The CPI that you look at right here, right now, is not the same CPI as it was back in the 1970s and 80s when Paul Volcker was the Fed chair. It's a completely different formula. And they have this new system of, I forget the word, it's like, it begins with an H. Peter Schiff talks about it all the time. And I'm ashamed that I don't remember it. But basically what it comes down to is like hyperbolic, something like that, calculus of inflation. What that means is that, okay, if beef gets too expensive, well, people switch to chicken. So they ignore the rise in beef prices and they figure, okay, people eat chicken now. And if chicken gets too expensive, well, pork is cheaper, and they modify the calculation for inflation. No, it's not. No, it's close. It's not hyper. You have hyperbolic. No, it's not hyperbolic. Hydranian. God damn it! Now I got to look for it. Hedonic. That's it. That's it. Thank you very much. That would have driven me crazy. That's it. I know it when I hear it. Here, I'll share this with you if you want to read it when you get a chance. Like button smasher. Thank you very much. There you go. That's what it is. So that's how they modify and massage the CPI data. If you're wondering how they do it, that's what they do. It's a complete joke. It's like manufactured denial. What else do we have? We did IWM. Let's move on. Tues. We have a short position, but we sold deep out of the money, naked calls against it. If we begin to break out tomorrow or next week, we're going to hedge that by opening up selling a put position deep out of the money, And that'll become what you call a strangle. Contrived qualitative adjustments. Very, very good. I like that. Hey, Franklin. So we have a doji star formation on the Qs. We're probably going up higher. I mean, it's really the safe bet to say that. Daily chart, we broke out on the 26th, pulled back, did a retest fully today, and we bounced. Stokes are weak, though, but we have a complete breakout on RSI, and we're probably going up higher. Volume light, who cares about volume anymore, right? It doesn't matter. They're just going to drip, 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 hit the... Yeah, a little bit of a fade here, but we're probably going to hold and go up higher. The bank's an outstanding week. Why? Yields are going up. We're up 3.39% on very light volume, but we're probably going up higher on the banks. Wow, look at this gap up here. Up and into the third standard deviation Bollinger Band. Wait for the pullback on the banks. XLK Technology, weekly chart, down week by 0.75 of a percentage point. We're going to have very light volume no matter what. We have a breakout on technology, just like we do on the Qs. Stokes are very familiar, very similar. We have a lower high, but unlike the Qs, we're flirting with a lower low. We're there. We're there. Whereas with technology, we have a breakdown on the Stokes. We have lower highs and lower lows now. Volume rose today, still below average. The semis up on the week by nearly a half percentage point. A little bit of a fade off the highs. Volume light. We may here, I'm going to memorialize this. I think we may get a W formation forming on MACD. Daily chart. Reversal bar on the day. No breakout yet on RSI, but we have broken out on price. Volume was good today, but slightly below average. Biotechs, continuation breakout, a little bit of a fade on the week, not loving that. Daily chart. Yeah, and this is what I've been worried about. That's why I had this yellow box. 50-day moving average is going to cross down below the 200-day moving average. I would expect a pullback, a reaction to the downside on LABU. But therein couldn't lie is an opportunity. So we'll watch it for a potential trade. But let this negative divergence be in the rearview mirror before we take any action. Consumer discretionaries, doji star formation on the week. Very light volume. Nice reversal day on the day. We didn't close at the highs, which would have been really bullish. We faded off the highs. And that's the thing about today's price action is that we We opened up strong. Then we collapsed on the GDP news and then rallied back, but we never came back to those highs. And if you think about it, you had really good earnings last night out of Qualcomm, out of Facebook. Who else? Google. Very good earnings. Yet it was a very volatile session today. That's kind of a tell. Energy. Beautiful week. Exxon reports earning tomorrow. We're long of earnings. Long of Exxon. Stokes may hook up. RSI is hooking up on a weekly time frame. Volume's going to roll in light. Ugh, didn't want to do that. Daily chart. Looks good. I mean, a little bit extended relative to the Bollingers, but looks good. Volume, very, very good. Very, very good. Oil. Good week. Good week. We had that pause last week, but no follow through to the downside. Up over 4% on the week, but there's no inflation. Don't worry about that. No. It's transitory. Don't worry about it. Don't look here. Don't look at this chart. No. Go watch Dancing with the Stars. RSI is broken out. A little bit of a fade on the day. How was volume? Volume was okay. Let's check out UNG. UNG was setting up nicely. They had data that was released this morning. They pulled back. Let's check out the weekly chart on UNG. Nice. Notice I haven't looked at the price action yet. Let's go to my save chart. I haven't analyzed natural gas in a while, so this is going to be dated. Actually, no, I did go over this. I drew this downtrend channel. We've broken out on a weekly time frame. You could argue we broke out last week and a continuation breakout this week. Doesn't matter. It looks like we're going higher on natural gas. And this is a commodity that's been in a multi-year downtrend. Look at this. And now we've stopped going down. Rule number one, to end or to identify an end of a bear market, it needs to stop going down. Rule number one, check that box. Rule number two, and believe me, I'm thinking about a trade here. Just like this reminds me of coffee. JO the symbol. Rule number two, watch for a higher low. Check that box. Remember, this is a monthly chart. Rule number three, wait for your breakout above resistance. If it happens to coincide with a new higher high, great. But that's rule number three. We don't have that higher high yet, even on a breakout on a monthly time frame. 1 day left to go in the month. Now, if we begin to break out, I'm not going to use 1137. That's a little bit too easy to achieve. I'm going to use 1458. A close above that mark, I'd be highly confident that we are entering a new bull run on natural gas. So members, we're going to be talking about this as we are with coffee. And I think it was Franklin that pointed out to me earlier that we saw a pullback on coffee prices, symbol JO. What's that? I think that's Tetrium. Tetrium? Why do I not have this saved? JO. Oh, no, it's iPath. Now, here's Joe. We spoke about this, I believe it was on Sunday night, a new bull rally in coffee. We broke out this week up. We were up higher, up 3.5%. We'll be watching to see whether or not we give up this support level by the end of business tomorrow. If we don't break out, well, if we fail to hold the breakout point, we're not going to execute a trade. If we do hold the breakout point, I'll look at the options, and I may sell naked puts against the position or just start buying it outright. I don't know yet. Jury's still out. It depends upon my mood, to be honest with you. Volume, outstanding volume. Daily chart. All right, so this is the pullback we wanted. It got away from us, couldn't chase it. This is why we don't chase. What took 3 days to gain took 1 day to take away 2.5 days worth of gains. So fear is a far greater motivator than greed. Volume rose today. So more on coffee, gold. Volatile week. I'm surprised that we're holding support here. We did bounce back on the day. Stokes are weak. Can't speak our book. Stokes are weak. Price is weak. I thought the GLD closed better than this. Yeah, the GLD is a completely different picture than spot. Strange. GLD was down 0.41%. Gold was down about a third. Strange. Okay. Gold mining stocks. This is a problem for GDXJ, and that we at current Thursday. This is why we look at the weekly charts, right? We want to identify opportunities. We want to identify risks to our portfolio. So we broke out 2 weeks ago. Beautiful. This week, we have pulled back. You would expect that we're going to do a retest of the breakout point here in blue. The problem is that at current, we are trading well down below. Not well down below. We're below it. We could easily come back tomorrow. But we don't want to see this close down below this support level. Daily chart. Stokes are down below 50. That's not usually good for the gold miners. Volume rose. All right. What else how much time do we have? 6:39. We'll go over the SILJ. This is the silver miners, down 2.5% on the week. Not much to talk about there. Silver, of which we are long, up week. Silver is more of an industrial metal as well as a precious metal, so that's why silver is up at current. And I think that's it. Do I have anything interesting to talk about? We'll just go to chart requests. I think U.S. Steel reported, or they're reporting tomorrow. Looks like they reported. U.S. Steel swings to Q1 adjusted EPS higher on sales. Declares divvy. They got taken to the woodshed for some reason. Okay. This may be an options play. A strangle, deep out of the money strangles. U.S. Steel pays fairly good premiums. Numbers, we're going to talk more about a possible trade, a strangle trade of U.S. Steel. And the only reason why I've really gone towards doing a lot of cash flow strategies over the past month is because of the uncertainty of the market. So the question is, how do we manage our risk better than many? What we want to do is we want to diversify our portfolio. We want to strategize by selling deep out of the money calls and puts at the same time, with the goal of them expiring worthless. And just in case this market tanks to the downside, we leave ourselves some downside protection, giving us a gap between where the market's trading now. Like suppose we wanted to take a position on the S&P 500, yet we didn't want to buy here. I want a discount. So I'm going to sell a 10% out of the money put on the market, and a 10% out of the money call on the market, expiring within 45 days to 30 days. Right? So what if the market begins to tank? I don't care. Unless it's a black swan event, I don't care, because I'm already 10% out of the money. The market can move 10%, and I'm not going to blink an eye. Add to that, I have a hedge on that position that as my put value increases in value and goes against me, my call value declines in value and works for me. And once I can take 50% profit on that call, I roll it down. And we generate more of a hedge. So that's the strategy we've been adopting. It's been working out very, very well. So again, folks, 14-day free trial offer. Check it out. I know it's not for everyone. I've had a couple of members, they've decided, you know what, you changed your strategy here a little bit. It's not for me, and that's okay. But we don't manage our portfolios. You manage your risk. And people need to appreciate that in this environment, all we need is a geopolitical event like we had with COVID. And we're black swanning all over again. I don't care what the Fed does. Remember that after COVID, that COVID correction, the Fed came out day in and day out with a new statement, a new plan. The markets didn't care. The markets did not care. They kept falling. The only thing that got us out of that doldrum was the spending by Congress. That's the only thing that got us out of that correction, and that's why we're here right now. What if we have another black swan event? We didn't know COVID was coming. So we're on very, very thin ice. We want to manage our risk. At the same time, we want to make money. So we're not going to be as gung-ho as we once were to the long side, to the short side. We're taking a much more deliberate, adopting a wait-and-see approach, generating cash flow. That's the game plan. All right? It's not sexy. It's not day trading, but it's safe. It's safer. It's nothing safe. It's safer than taking on big macro bets on this market, because I don't want to take a macro bet to the long side because I have no idea when the rug's going to get pulled out from underneath me. I don't want to take more macro bets to the short side because I had to fight the Federal Reserve and Treasury. So what do? You sell deep out of the money puts and calls at the same time. Be the casino, not the gambler. JW, do you use fib retracements? If not, why? That's a good question. I use them sometime. The reason why is that I prefer to use, like Fibonacci retracements, I respect a lot. But I respect a lot more historical support levels. Some people swear by moving averages, moving up, and buying at those moving averages. That's fine. I respect that. Some people believe in using the Fibonacci retracements to identify a good support level to buy at. Fine, I respect that. I like to wait for historical support levels to get hit, breakout points to get retested. That's what I do. The thing that happens is that if you take the Fibonacci retracement tools, you may or may not have, and you try to combine your two strategies, right? You're looking for retracement to a historical support. But if you're using the Fibonacci's in conjunction with that, you're complicating your strategy. And all of a sudden, what you're doing is you're entering that way of strategizing about when do I want to add or open a trade here. You're taking that in your mind, you're starting off very, very safe, very, very deliberate in your approach. And you're right. The only problem is that you get analysis paralysis, because your support level on historical supports may have been hit. Yeah, it may not be lining up with the Fibonacci retracement. And you're saying, what do I do here? You're questioning yourself. You don't have a solid platform from which to make a decision. All of a sudden you wake up one day because all you're doing is torturing yourself. What do I do next? And all of a sudden your opportunity has left. And you're sitting there, you had an opportunity lost. So in short, I use the Fibonacci retracement tool when I'm not confident in my historical support levels. I'll bring it in as a validator to validate what I'm looking at on my historical support levels. Sometimes it validates it, many times it doesn't. So I hope I answered your question. That's my honest answer. And everybody has their own process that works for them. The key is find what it is. If it works for you consistently, what's consistent? 70% of the times you're doing good. You're doing good. If you're right in your trades 70% of the time, and you're cutting your losses small, letting your winners run, you're doing pretty goddamn good. So keep it simple. Keep the analysis simple. That's what intimidates a lot of people about technical analysis, is all this jargon. And people watch CNBC and they talk about, rather than saying, 25 basis points, rather than saying a quarter basis point, they have to use terminology like a quarter basis point. Why? Just say a quarter point move. They need to make it sound more complicated, that they're smarter than you. You need them. You need to pay for their services. That's BS. That's BS. Everybody could do it with the tools available that I use. Thinkorswim, TrendSpider, StockCharts.com, a decent options analysis platform, whether it's TOS or Fidelity has a good platform for analyzing probabilities. You're good to go, man. You don't need these guys. You don't need these hedge funds, 2% and 2% management fee and 20% of earnings. Who needs that nonsense? These guys are going bankrupt. So that's my long way of saying, keep it simple. You could do it yourself. I've been using them for intraday trading futures. Hey, JW, if they work for you, that's fine, man. As long as you're using everything consistently, you're in your flow, and you're not changing it up every other day. Because when you use them consistently, you get that. That's what builds that intuition. That's what builds that gut instinct of, you only need to look at those fibs like for a second. If you're using them consistently and you've been doing it profitably, and you know it in your heart of hearts that you get a nice reversal bar off of whatever retracement level you're looking at, and you're good to go to the upside, or maybe you want to wait. All right, so keep it simple and stick with what works for you. But sample stuff, no doubt. Let's do some chart requests. I don't think I had anything in, let me double check, in the members area. Oh, I had a couple of last minute entries here. Snow and JPM. Snow and JPM. Okay. And we'll take some from the gallery as well. William, AMZN. Light crowd tonight, man. I can't believe this. And Green KRBN. I got the AMD and Intel. Will. I saw another one. TTD. Okay. Let's do this. Now, Intel I know reported. AMD I know reported. JPM I know reported. The other ones I don't know if they've reported yet. Okay. Snow. Wow, this thing fell apart. No likey, man. I mean, it's in a very tight. A very tight trading range. So, who was it that asked me? I think it was JW that asked me about the fibs. I think it was JW. So, you know, when I see this volume shelf and how it coincides with the bottoming action on these candlesticks, that's a good thing. I feel comfortable there. I don't like the current candlestick price action on a weekly time frame. It's a bearish reversal bar, so automatically that's a turnoff to me. I keep thinking that, you know what, we're probably going to retrace. I negative project, always. I negative project when I see a bearish reversal bar. And that's because it all goes back to probabilities. The probability is that if we close like this, we're pulling back further. Now, the key here to remember, let's take this off. The key here to remember is that we also have a rising lower band of support. What do I need to buy this stock? I need clarity, right? It goes back to what we were just talking about with natural gas. Rule number one, you got to stop going down. Check that box. We did that back in March. Rule number two, you got to start putting in a higher low. Check that box. We're there. Rule number three, we now need to see a breakout. We're not there yet. We're close. We haven't hit that third target yet. So I'd be fine with the speculation, scratching the itch, putting some skin in the game and buying with a tight stop below 222.84. And then adding more aggressively once the market takes you out and above 242 per share, if that makes sense. So it's interesting, but weak stocks tend to get weaker. I never forget that rule. So could we break here? Certainly. Might it hold? Probably. So I would stay very, very small, tight stop below the lows of the week of the 19th. If we fail to hold that level, I'd be out. So small opening position here, tight stop, small loss. If you're wrong, all right, who cares? Stop out, you move along. Then you wait for your breakout, then you get bigger. You pay up a little bit more, but you're paying up. You're paying a premium for the probability of the shares going up higher. Right? So it's worth the wait. Daily chart. Yeah, I mean, this thing should have broken out today. It didn't. My guess is, did it report earnings? No, I'm not seeing anything here. All right. If they had reported earnings, I could have rationalized this a little bit, but They didn't. So warning flag on the track. Bearish price action today on snow. I would avoid it right now. JP Morgan, got to be looking good. I know it's looking good. Weekly chart. It's a buy. Weekly breakout. Volume's going to roll in very, very low on JPM. Moving averages here in blue. You can see how dramatically we're going to roll in lighter. That's a bit of a concern. Daily chart. Take note. We broke out. We retested support. It held nicely. 153 sprint. This is a buy. This is a buy. JP Morgan's looking good. Very bullish. Especially if yields continue up higher. AMD. They have reported earnings. We know that. Good numbers. Very good numbers. Couldn't capitalize on those earnings. We're flirting with a breakout on a weekly time frame. Volume is good this week, but a ton of volatility. I see what we're doing here. I see what we're doing here. All right, so here's the value of the automated trend lines. And frankly, my manually drawn trend lines were pretty spot on, to be honest with you. But TrendSpiders are pretty good too. All right, so what we did, I would argue mine were more accurate because mine were hit. Mine were hit. Theirs were hit too, but mine, they overshot to the downside and hit mine. So take that, TrendSpider. I like the chart. I think what we're doing here is we're pulling back, doing a retest. You had some profit taking on earnings. We're retesting now. I have a bunch of sensitivity on here. I think you need it. How do we close out the day? Let's go to a 2-hour chart. We're in a consolidation range here on a 2-hour time frame. Again, value the automated trend lines. Take them off. Put them on. There's your upper band of resistance. Here's your lower band of support. That lower band of support coincides with where I have my daily trend line drawn. So if this line gets tapped, in all probability, my alert's going to fire off. So AMD looking good. We may just break out here and have a strong Friday. Intel. Typo. Babo. Okay, Intel. 2-hour chart. Just happened to be here. Looking good. I wouldn't have spoken about it. Looking good. Flirting with a breakout out of this downtrend channel, this descending wedge formation. Let's go to the weekly chart. It's at support. Again, power of the automated trend lines. There you have it. I want to say it's a buy, but I want to check with the daily chart first. I don't like the gap down. You're probably going to get a continuation move up higher. Watch for two things. One, 59.51, which is the top of this volume shelf. Expect some resistance there. Two, the filling of this gap at 62.38. Those are your two price targets at current. It's going to be difficult for Intel to get through these. If it does, then it's a longer-term swing trade to investment. But right now, it's just a short-term swing trade to the upside, and I would keep a tight stop below. Going back to as a matter of fact, I could use the daily chart, overlay weekly support, and there you have it. In dashed line, that's weekly support on a daily time frame. So this is the value of multi-time frame analysis. If we break and close below today's lows, or if you want to be very, liberal, a close below the lows of the 28th, you got to get out. But it looks like it should bounce. The semis should bounce. KRBN. Crane shares global carbon. This is a carbon tax play? Monster. Oh, I want to see who the lead underwriters were on this. If this is what I think it is, I'm going to research this a bit more. I'm not going to waste your time. But it's pretty goddamn interesting. We're flirting with a breakout here. Well, we're already broken out. We're flirting with a breakout above. I don't know why there's a volume shelf like this above. It doesn't make sense. We've never been here before. Why would there be a volume shelf up here? $32.23 resistance. Good volume on the week, daily chart. I think the reason why we have this volume shelf is that we've seen multiple high days of volume within this trading range, and the volume shelf just got extended out. So we're at resistance at current. We faded a little bit on the day. Let's do a deeper dive on this. 2-hour chart. Be careful. We broke support on a 2-hour time frame today. I mean, it's an intraday chart. We're not day traders here. It could hold, it could rally back, but just be careful, be aware of it. We broke down below the lower band of support. Warning flag. But overall, it looks very, very good. If you're looking for a support level to buy at, 31.59, I would keep a little bit of sensitivity on there to encapsulate the lower band of this volume shelf. We'll keep this active for 10 days. And we're good to go. Set it and forget it. All right. TTD. The trade desk. Frankly, we got to think of a way to use the trade desk for like a live stream. You're creative. The trade desk. I like that. All right, so we had a rough March. Inside bar this month. Good comeback. Volume's light. Very, very light. Don't like that. But the price action is good. Weekly chart. Let's get rid of all these drawings. Okay. So we stop going down. We have a higher low. We're limping up. We've broken out, but no new higher high yet. Here's your pivot point on the W formation. This thing's over $800. I'd be interested on a breakout above resistance. So our alert is set. I don't like the volume. I'm worried about a pullback here. Monthly volume week, weekly volume week. Yes, we've stopped going down, but we're just limping up. A little bit of a fade on the week from its highs, daily chart. This is why. Take your trend lines off. Put them on. Tells you the story. We have resistance above. So the question is, where do we buy in a pullback? Is that an option? I think it is. And there you have it. And we're good to go. You're welcome, R Train, anytime. And with that, folks, I want to say thank you for joining. Small crowd tonight, but please smash that like button. Thank you very much for joining. I always appreciate your company and your time. And everybody have a profitable trading day tomorrow. And have a great weekend. And I'll talk to you soon. Be well.